Hi there, I'm Christian Brim. Welcome to Core Focus, where we give you one business breakthrough for your small business in less than 5 minutes. My guest today is Linda Glass from Bank First. Linda, how are you?
I'm fine, Christian. How are you doing?
Well, thank you. For those of you who don't know Linda, Linda became involved in small business administration lending in 1984, working for a non-bank lender. And since 1990, she has been the lending officer at Bank First, the state's most active SBA lender for the last 26 consecutive years, where she serves as vice president. She specializes exclusively in the SBA lending programs, 504, 7A, contract lines, express program, within the bank's SBA lending department. And since 1990, Bank First has funded over 500 small business loans totaling approximately $150 million to Oklahoma businesses. These loans include business startups, business acquisitions, and business expansions. The subject today is SBA financing, and the rules are simple. We have 5 minutes for the interview, and when the countdown timer reaches 0 and the buzzer goes off, the interview is cut, whether you are in full flight or mid-sentence. Linda, do you accept the challenge?
I do, thank you.
Great. Your time starts now. What are the benefits for using SBA financing?
Well, surprisingly, there are many benefits. The first one is that you can get longer terms than are normally available through conventional financing. As an example, if you go to do a real estate transaction with your local bank, you're probably going to get maybe a 10-year term, maybe a 15-year amortization, which means your payments are based on 15 years, but your maturity will be in 10 years. Just an example. Under the SBA programs, the SBA allows us to do financing up to 25 years, fully amortizing, so you have a full term and amortization. It also allows you to do lower equity requirements, such as on a real estate transaction. Normal bank conventional financing is about 75% loan to value. Under the SBA's policy, it allows us to do as high as 85%. There are other programs in the SBA, such as the 504, that will allow us to do as high as 90%. It also allows us to do startup financing because obviously when you're starting a business, there's a lot of risk involved in that. That SBA guarantee helps to mitigate that risk because it's a guarantee that the SBA issues to the lender.
So we're talking about lower payments, longer terms, startup companies, more money for collateral. Did I cover it all?
Yes.
All right.
Yeah.
So tell us a little bit about the different SBA lending programs.
Well, there's several that fall underneath the SBA's umbrella. The basic program is an SBA 7A loan, and it can be used for a wide variety of purposes. You can use it to buy inventory, working capital. You can use it to purchase equipment. You can use it to buy out your partner if you're already in business and your partner decides that they want to leave and you want to acquire 100% of the business. It can be used for debt refinancing as well. So that's pretty much the bread and butter program of the SBA. There are other types of programs, such as the SBA Express program, which is truly a revolving line of credit under the SBA. And that program is limited to $350,000. Under the SBA 7A, the maximum loan amount is $5 million.
So let me ask you a quick question about the Express program and the line of credit. Does that work the same as a bank line of credit where you have borrowing-based certificates and those types of things?
Well, the SBA Express is typically just a revolving line of credit like you would use a credit card.
Okay.
There are certain programs through the SBA that allow you to get a higher loan amount up to $5 million, and those would be the contract line of credit, the small contractor line of credit, and the cap lines, which includes a seasonal cap line, export working cap line, and a working capital cap line. The cap line, that working capital cap line is basically tied to your receivables and your inventory. And that's 80% of receivables under 90 days and 50% of your inventory value. So it is tied to a borrowing base.
Okay.
The contract cap line is if you have a government contract, that contract's assignable, we can fund up to 100% of the labor and material costs.
So what about lack of collateral? I hear that a lot.
That's where the SBA comes in and helps to mitigate those weaknesses. On loans over $150,000, the SBA will guarantee up to 75% of the loan. So we do a lot of working capital type loans to where somebody may come in and have a lacking of collateral, but they've got in a service base as an example.
Okay.
There's little assets in a service-based business, but there's traditionally a lot of cash flow that goes through those companies.
Mm-hmm.
So we may take a receivable, security interest in the receivables, and fund a term loan for some permanent working capital, or give them an express loan so they can have an operating line or something like that. That SBA guarantee helps to mitigate, because in the event of default, as an example, on a $100,000 loan with an 85% guarantee, if the bank asks for a repurchase from the SBA, then the SBA will pay the bank $85,000 and the bank will have a $15,000 exposure.
So I got 30 seconds left. One of the questions I get, you're not actually borrowing money from the SBA in most cases, correct?
That is correct. Yeah, the banks are required to submit their loans and service their loans, and Bank First is a preferred lender on behalf of the SBA. So we underwrite it to the SBA's policies, and we also submit the loan electronically as a preferred lender. So you're never actually dealing with the SBA, it's just with Bank First.
Awesome. Linda, where can people go to get more information or resources? How do they get a hold of you?
They can email me at linda.glass@bankfirst.com, and that's BANKFIRST.bank, excuse me. Or you can look at our website, www.bankfirst.bank.
Great, Linda. I appreciate your time today, and thanks for being on with us.
My pleasure, Christian.